Today is Monday, 9th of June 2025, 6 a.m. Eastern Time. This news is brought to you by Preeti Capital, your trusted source for financial insights.
Welcome to the deep dive. We're going to jump right into some really interesting source material with you today.
Yeah, all about navigating the financial markets as they stand right now.
It feels like there's a lot going on, kind of conflicting signals maybe, so we've pulled together some recent articles, data points.
That's right. We're looking at the big picture, economic indicators, market indices, but also drilling down.
Right, into specific companies, what they're up to, upcoming earnings, even dividends, a real mix.
Exactly. And the goal, I think, is to sort through it all together.
Yeah, find the key takeaways, connect the dots a bit, and figure out what this snapshot tells you, the listener, about what's really driving things.
It can seem like just a flood of numbers and news sometimes.
Totally.
But we'll try and guide you through, pull out the interesting bits, and hopefully make it a bit clear.
Okay, let's get into it. Looking across these sources, what's the general feeling they're getting from the market?
Well, the main vibe seems to be cautious optimism. That phrase comes up quite a bit.
Cautious optimism. Okay,
Mm.
like hopeful but hesitant.
Something like that.
Uh,
There's this desire for stability, but everyone knows things are pretty fluid globally.
Right.
And the sources really stressed you can't just watch the main index numbers. You got to track specific sectors, watch those moving averages.
Okay, but despite that sort of caution, the big indices actually did pretty well recently.
They did, yeah. Solid gains actually. The S&P 500, it was up just over 1%, closed above 6,000, 6,000.36.
Wow, 6,000. And the Dow?
Dow Jones climbed about the same, 1.05%, finished up at 42,762.87.
But the Nasdaq was the real standout, wasn't it?
Absolutely. It gained 1.2%, closing at 19,529.95. So, yeah, strength across the board, but definitely tech-heavy NASDAQ pushing ahead.
And what are the sources pointing to as the main reason? What kicked off this positive move?
The big catalyst mentioned almost everywhere was the latest U.S. jobs report.
Ah, okay. Good numbers there.
Pretty solid. 139,000 jobs added in May, and the unemployment rate held steady at 4.2%.
And that kind of news, it usually makes investors feel better about the economy.
Exactly. It tends to boost confidence quite a bit. People see a strong labor market and think, okay, the foundation's still pretty solid.
And we saw that confidence reflected in the VIX too, the fear gauge.
We did. It dropped significantly, down 9.25% to 16.77.
It was pretty low.
It's the lowest it's been since February. And yeah, lower VIX, lower volatility usually means less fear, more willingness to take on some risk. It lines up with that jobs report optimism.
Okay, this is where it gets interesting though, because it's not just stocks. What about other areas? Commodities, bonds, currencies? What did the sources say there?
Well, energy prices saw a definite jump. WTI crude, it was up over 2% to $64.77.
Okay.
And Brent crude, similar story, up 2% to $66.65.
And the reason given?
Pretty straightforward. OPEC Plus's decision to boost output, that seemed to be the main driver there.
Okay, so oil's up, but gold went down.
Just slightly, yeah. Down about 0.59% to $331.
Why is that if there's optimism? Shouldn't it be up too, or?
Well, the sources link it back to that optimism we were just talking about. Investors felt a bit more confident, so they moved away from gold, the traditional safe haven, maybe into riskier assets.
But hang on, silver went up. That seems weird if people are leaving safe havens.
It does seem a bit counterintuitive, but yeah, silver surged up 1.24% to $36.13.
Mm-hmm.
The thinking in the sources is that maybe investors were looking for alternative safe havens.
Mm-hmm.
Or maybe it's just different factors driving silver right now. It's a neat little wrinkle.
Definitely interesting. Okay, shifting to bonds, the 10-year Treasury yield moved up.
Yeah, a pretty significant increase actually, up 2.64%, closing at 4.51%.
And what does that usually tell us?
According to the sources, it reflects market expectations of sustained economic strength. Basically, if the economy is expected to stay strong, maybe inflation stays sticky, maybe the Fed keeps rates higher, bond yields often rise in anticipation of that.
Got it. And the US dollar.
Edged up a bit. The dollar index rose just under 0.5%, 0.47% to 99.2 on.
Aid reason cited.
The sources just kind of place it amid ongoing global trade developments. Currency moves are complex, lots of moving parts.
Okay, so that's the big picture. Cautious optimism, stocks up thanks to jobs, volatility down. But then you've got these kind of mixed signals in commodities and rising bond yields suggesting maybe expectations of strength ahead.
That sums it up pretty well. It's not all one simple story.
Definitely not. So let's zoom in now on some specific companies, the sources we're talking about, starting with the ones doing really well, the high flyers. Applied Digital really jumped out.
Oh yeah, Applied Digital had, well, an incredible run. Its shares surged 145%
Okay.
over the past month.
145%. What drove that?
It looks like a combination of things. Strategic moves, these big lease agreements they signed with CoreWeave,
Okay.
and they also did a $200 million equity offering. Plus, one analyst firm, B. Riley, gave them an optimistic price target. So kind of a perfect storm of positive news.
And you mentioned CoreWeave, the NVIDIA-backed company. They saw a bump, too.
They did, up 8%.
Yeah.
And that seems directly tied to that $1 billion data center deal with Applied Digital.
Ah, so the deal boosted both sides?
Exactly. And it kind of highlights NVIDIA's interest, their strategic focus on building out that high-end computing capacity, probably for AI stuff.
Makes sense. Recursion Pharmaceuticals also had a strong showing.
Yeah, up over 20%. That was apparently supported by the launch of a new AI model they developed called Boltz 2.
AI again. Seems to be a theme.
Definitely. This model is supposed to help speed up drug discovery. So you see that AI potential getting priced in, plus some good analyst recommendations.
Okay, switching gears completely now. Manchester United, the soccer club, their shares climbed.
Yeah, see? Markets are diverse. Their shares went up after they reported revenues that were better than expected.
Really? What drove the revenue?
Specifically, their performance in the UEFA Europa League. But here's the interesting part. They actually posted a quarterly loss
So why did the stock go up?
because they raised their forecast for annual profit. So investors looked past the short-term loss and focused on that improved future outlook, boosted confidence.
That's fascinating. Future potential trumping current results. What about QXO Inc., another double-digit riser?
Yep. QXO was up 13.43%. The sources point to a favorable rating from an investment firm and also news about a strategic acquisition plan.
Ah, so growth through acquisition.
Seems like it. Positioning themselves for big growth in the building products distribution sector, according to the analysis.
Okay, and one more in the winner's circle. D-Wave Quantum.
Ah,
Stock surged.
it did. Lots of investor excitement around their new quantum system, the Advantage 2.
Quantum computing still feels very cutting edge.
It is. And D-Wave keeps getting attention for, revenue growth and just pushing the tech forward.
So looking at these winners, Applied Digital, CoreWeave, Recursion, QXO, D-Wave, even Manu, there's a real thread of tech advancements, big strategic deals, positive outlooks.
Absolutely. Innovation, growth potential.
Yeah.
That's what the market seems to be rewarding right now. Sometimes even looking past current bumps, like Manu's loss.
Okay, so those were the high flyers. Now for the other side of the coin. Companies facing headwinds. Lululemon stood out with a pretty big drop.
Yeah, Lululemon shares fell quite sharply, nearly 20%.
Oof. Why the big drop?
The sources said it was down to disappointing earnings results and also, crucially, adjustments to their future outlook. That combination led analysts to cut their price targets.
Makes sense. Forecasts matter. DocuSign also fell hard.
Almost 19% down for DocuSign. The trigger there was cutting their full-year billing outlook.
So billing outlook, okay,
Yeah.
not just profit or revenue.
Right. And the sources kind of connect this back to their strategic shift towards AI. Sometimes these big shifts, even if they're needed, can cause some short-term pain or uncertainty that hits the stock.
Right. Transitions can be rocky. Now, Braze Inc. was interesting. It fell even though it beat earnings.
Yeah, that's a great example of how the market can be tricky. Braze dropped, what was it, 17.65%, despite beating earnings expectations.
So why the fall then?
The sources suggest it was maybe a reaction to mixed results overall, like maybe guidance wasn't great, or there were other details investors didn't like,
Ah, okay.
and also mentions of strategic leadership changes potentially weighing on the stock. So the headline earnings beat wasn't enough to overcome other concerns.
So unlike the winners where there was a clear theme, with the losers it seems more about disappointing forecasts, maybe execution worries, or just mixed signals that spook investors.
I think that's fair. The market's often very focused on the future path and how clear it seems, maybe even more than just the last quarter's numbers.
Okay, good insight. Now looking ahead, the sources flagged some upcoming events, specifically earnings releases for June 9th that could be market movers.
Yeah, earnings season always brings potential volatility. And the sources mention this idea of the implied move.
Right, explain that again.
It's basically what the options market is predicting for how much the stock might move, up or down, right after the earnings come out. It gives you a sense of the market's anticipation, how much uncertainty is priced in.
Got it. So let's look at a few they mention. Woodside Energy Group.
energy sector company. Their implied move is pegged at around 3.65%.
which is moderate.
Yeah, it suggests moderate anticipation. People are watching, but maybe not expecting a massive swing.
Okay. How about Casey's General Stores, the retail chain?
Casey's shows a more significant implied move, 7.14%.
Nearly double Woodside.
Right. Reflects potentially higher volatility expected there, maybe something specific to their sector or the company itself.
Now, VinFast Auto, the EV maker, reports before the market opens, and its implied move is huge.
It really stands out. 14.62% implied move.
Wow.
That signals really heightened investor interest and, yeah, the potential for a really big swing in the stock price.
Yeah.
Makes sense, given how dynamic the EV sector is and VinFast's own growth plans.
Okay. Lufax Holding, yeah, the fintech company, also pretty high.
11.03% implied move for Lufax. So again, notable market speculation there. The sources linked that to the ongoing regulatory shifts in China's financial sector, which is a big deal for them.
Right, regulatory risk. But the highest implied move mentioned was for Passies Group.
Yeah, Passies Group tops the list with an anticipated move of 22.03%.
Over 22%. What does that signify?
It suggests the market is bracing for potentially major news or results. Could be a huge beat, a huge miss, a big strategic announcement, something that could really shift the narrative. Given their acquisition plans mentioned earlier, that could be part of it. High anticipation there.
So definitely some potential fireworks around those earnings reports next week.
Could be worth watching for sure.
And finally, the sources also briefly touched on dividends. Less dramatic than earnings, maybe, but still important info.
Absolutely. It's about companies returning value to shareholders, shows financial health. Alphabet, Google's parent, declared a dividend of $0.21 for both share classes.
Maintaining that stability narrative, the sources said.
Exactly. Then you have CME Group, offering a much larger dividend, $1.25.
Yeah, and that reflects.
Their strong cash flow position, according to the sources. Healthy cash flow often means more capacity for bigger dividends.
Gotcha. And SEI Investments and Stephen Madden.
They announced dividends too, $0.49 and 21 cents respectively. Just examples, the sources say, of companies showing consistent shareholder returns, even in different market conditions.
Okay, wow. We've really covered a lot of ground here, pulling from all these different sources.
I have. From that overall market mood, the cautious optimism,
Yeah, driven by the jobs report, leading to higher indices, lower volatility.
but then complicated by those shifts in things like gold versus silver and those rising bond yields, hinting at economic strength maybe.
Right, and then zooming right into specific companies. The winners, often driven by tech, by deals, by future promises.
Contrasting with the losers, hit by missed forecasts or tricky strategy shifts.
And we looked ahead, too, using that implied move idea to see where the market expects volatility around upcoming earnings, especially for names like VinFast and Passies Group.
And even touched on dividends as a sign of stability and shareholder returns from companies like Alphabet and CME.
It really shows how looking at all these pieces together, the macro, the micro, the future events, gives you a much richer sense of what's going on than any single data point.
Definitely. You see the connections like how a jobs report flows through to index levels or how one deal impacts two different stocks.
So to wrap up, here's something maybe to chew on based on everything we've unpacked from these sources today. We're seeing this environment of, let's call it broad optimism, but beneath that, there's intense volatility for specific companies, driven by AI, deals, soccer results, you name it.
A real mix.
Yeah. So given that mix overall caution, but sector-specific surges and these big individual company swings, what does that tell you about the most important factor, or maybe the most important skill needed to navigate these markets right now? Where are the biggest opportunities and maybe the biggest risks really hiding?
Something to think about.
Yeah,
That interplay between the big picture and the specific stories.
absolutely. Well, thanks for joining us for this deep dive. We really hope unpacking these sources together was helpful.